Let's get the business news. Lots going on, Simon.
Yes, indeed. As you're hearing in the headlines, Barclays boss John Varley will step down after 7 years to be replaced by Bob Dimond. Mr. Dimond is an American and has been head of Barclays' investment banking business. In 2008, for example, he led the purchase of Lehman Brothers' US businesses, or what was left of it. He was responsible for transforming Barclays from a high street retail bank into a global financial powerhouse. This appointment could be seen at odds, perhaps, with the government's back-to-basics approach to banking. He could be paid over £11 million next year if he hits performance targets. Well, I'm joined by Chris Roebuck, visiting professor at Cass Business School. Good morning to you, Chris. So much for a big change in banking after the financial crisis. We've got an American investment banking, that's the buccaneering end of the banking industry, in charge, getting paid £11 million a year. Nothing's changed.
I think you can say that actually the banks are trying to move on, but in terms of the core commercial necessity of making money for their shareholders, which is what their legal obligation is, they need to have somebody at the top who is experienced at making money. And if we look at Bob Dimond, he is experienced at making money. Barclays weren't caught out as badly as everybody else, so therefore, given the departure of Eric Varley, he's the obvious candidate.
What difference will this make to Barclays? He's long been seen as one of the most powerful people at Barclays. He's now got the top job. What will that mean to its customers and the role the bank plays?
In some senses, what we're doing is we're seeing the confirmation of a pattern of Barclays moving from what most people think is a retail bank in Britain on the high street to effectively a global powerhouse that is in some cases earning as much money from its business in investment banking across the world as it is from having branches in Britain. So we're seeing that confirmed, which is the reflection of what other banks are doing, looking wider than the UK to make more money in emerging markets in other businesses.
OK, investment banking is something we should probably explain. It's sort of the raising of money for companies or trading and selling things rather than providing loans and mortgages. Now, it's very profitable when it goes right. When it goes wrong and there's a high street retail bank, the British taxpayer could be asked to bail them out again.
Well, this is one of the issues that we have had, and indeed the Americans had with their banks. What we need to do is we need to ensure through the new regulations that are coming through Basel, who are meeting in Switzerland today, the top central bankers, about risk, to make sure that whilst, as you said, the buccaneering investment bankers are out there making money, they're doing so in a way that isn't going to risk the retail banking side.
Right, it's all changed at the top of another big bank, which will be familiar to customers in this country, HSBC, started in the Far East, but has big presence here. Their chairman going to become part of the coalition government as trade minister, possibly answering to Vince Cable, who wants to break up the big banks.
Yes, I think there may be some interesting discussions around the table in relation to this banking commission, but Stephen Green, in terms of his amazing contacts out in emerging markets, is going to be really useful for the government because he has the sort of connections that David Cameron wants to help us push our exports out into what are the most fast-growing markets in the world and make money for the whole country.
A lot of expertise in that area, of course, having been boss of what was formerly Hong Kong Shanghai Bank. Thanks,
indeed.
Chris, thank you very much indeed. Let's have a quick look at the markets. You can see actually on that news the Barclays share price has fallen 3.5%, but City watchers I've been talking to this morning say that's more about uncertainty in Europe. The FTSE itself down 46 points. More from me a little bit later. Back to you.
Thanks a lot, Simon. 6 months ago,